Welcome to the next panel here at GTR MENA. We'll be taking a look at the choppy waters facing the global shipping, cargo, and logistics, and financing as well. So it's quite fortuitous timing, I think, because some of these topics already came up sort of towards the end of the last panel, have been touched on this morning already. But essentially, we're going to have a look at some of the challenges that have arisen around supply chains, around shipping, kind of over the past few months, maybe over the past sort of year or so. We'll talk a bit about how logistics companies, banks, trading companies, and others have responded to that. But perhaps above all, we're going to look at the role of technology. So digital documents, automated processes, and so on in overcoming some of those challenges. So on that note, I'm delighted to introduce our panelists today. We're lucky to have a great lineup of speakers. So joining me immediately to my left is Mark Emmerson, head of GTB at Abu Dhabi Islamic Bank. And then we have Nazan Nobakht, Group Chartering and Logistics Director at Petrochem Middle East. Then Mike Bhaskaran, Chief Operating Officer for Logistics and Technology at DP World. And joining us remotely on the big screen here, we have Orhan Gunes, Managing Director and Head of Commodity Trade Finance at Sberbank in Switzerland. As Vince mentioned, I'm John Basquill. I'm a senior reporter at GTR. A huge thanks to my panelists for joining. It's great to have you here. So before we jump in, I'd just like to encourage any of you in the audience here or anyone watching online to ask any questions that come to mind at any point throughout the panel. I'm keen for this to be interactive, and we all sort of said beforehand we're happy to be guided by what you would like to hear. So please do keep questions coming in. But just to kick off then, so maybe Mike, I could start with you if that's okay. It's obviously been a challenging few months for some in the world of shipping. So we've seen a lot of disruption to supply chains, delays, high costs. Maybe could you give us a bit of an overview of how these issues have kind of unfolded in this region?
Yeah, I think in terms of, thank you. I think GTR for inviting us to this panel. Really appreciate it. Good morning to everybody. So one of the key things that I notice is we're noticing clearly with disruptions in the Suez Canal, Corona, what have you, or like trade imbalances that we notice right now, it's caused a lot of container shortages and shipping costs going up, has caused severe disruptions, which actually forces you to build more inventory, and subsequently there is like a cycle that goes through. From our perspective as DP World, what we've done is we've introduced platforms, like a lot of digital platforms to solve these problems, and we've seen like customers rewarding us as long as we are supporting customer-related solutions. One thing that we did was crates.com, which allows you to ship from anywhere to anywhere. We aggregated a slew of freight forwarders across the globe in 194 countries, and we can ship from point A to point B. Then the next aspect of supply chain is trade and visibility. As a part of the cargoes platform that you just see in our booth over here, we give you visibility of where your container is at any given instance, called cargoes flow. And of course, the trade finance, the most important aspect that we see. One of the key things that we've introduced is container as a collateral. There's a lot of discussions earlier about the liquidity and availability of like tier 3, tier 4 suppliers. And then, so if we have an anchor tenant, if they're passing through our port, we have the ability to go back and survey the merchandise and then hold the container in quarantine. So that de-risks significant a lot of the financial institutions and gives them an incentive to come and work with our platform. Of course, as a platform, as a part of we are using blockchain for immutability and a lot of the data governance aspect of the processes, and also good contracts where you can actually disperse funds as soon as the loading port, a container comes to a loading port, then you can just give about 20% of the money to the supplier and then the line hauler, and subsequently different stages of the supply chain you can actually manage that. So we're very excited about presenting the Cargoes Finance platform and invite a lot of financial institutions to come participate into this marketplace so we can, obviously we have a slew of about millions of customers right now going through our ports. We did about 79 million containers last year, so about little over 11% of the global container trade. And trillions of dollars worth of merchandise actually going through our platform, which requires financing. So our strategy was to go ahead and then build this capability. So we are seeing disruptions, but again, going to the customer and solving it specifically, we were rewarded well with that.
Excellent, thank you. I think there's quite a few threads I think we can pick up on a bit later on there around, particularly around kind of data and use of technology, but just staying on the kind of the theme of disruption and the trends we've seen over the past few months. Nazan, maybe you could give us a kind of corporate perspective on what you've seen.
Sure, thank you very much for having us here. It gives me a very nice feeling to finally sit for a meeting in person after the last 2 years of virtual meetings on Zoom and all the other stuff. Well, actually, after the COVID outbreak and its twists and turns, we as a corporate could see a lot of hurdles, first of all, not only because the world was in a shock, but also you could see that all these lockdown restrictions, production cuts had led to so many other hitches and glitches that kept the people on toes to just wait and watch and see what is going to be done. I think what happened was that the whole 2020, the world was in shock, businesses were in shock. Like any other turbulence, people were trying to find out their ways. And finally, by the end of the year, all the businesses, including us as the corporates, actually, we saw the light at the end of the tunnel. Why? Because turbulence can come. I think you all may agree that only those companies who are agile and nimble may succeed and come out of it stronger than before. So how we look at it is that from a corporate point of view, yes, there were a lot of barriers, as Mike was saying, container shortages, vessel spaces were not there. The trade patterns were trying to normalize, but the platform was not ready for it. So slowly, the hurdles faded away. You could see that people were finding their ways to come back with more e-commerce, consumer goods went up, and we could see that the requirements are popping up. So we found the opportunity to get into the market, to do the trade, and as before it was discussed here, manufacturers and traders were trying to find a sort of balance to make sure that from a supply chain point of view, they are going to stand on their words and deliver. But the million-dollar question was how? Because the number of vessels were there were port stays, like long port congestions. We were having ships that were waiting for 14, 16 days, or as a mandatory pandemic protocol, the ship had to stay there for a month. So all this created backlogs. We literally had a lot of problems with delays, port storages, demurrages. In the meantime, Suez Canal, one ship got grounded there, so another backlog created over there. And as you see, the commercial part, it could be dealt with easier. When it comes to executing of it and shipping it, that's where the problem occurs. So what we basically did is that after the outbreak and seeing all these hurdles, we looked at all those opportunities. When the trade patterns started normalizing, every company that was nimble, agile, and could adjust themselves were resilient enough, they could find their ways, like we did, especially sitting in Dubai, and could find their ways out. Not that it is easy, we are still in a problem, but as you all know, in 2021, the volumes increased globally, which means despite all this, people found their ways, traders found the opportunities through the unilateral help of all these stakeholders. Before, everything was vertical-based. Now you see that every vertical is involved in a very nice collaboration to let the work happen. We also did that with a proper BCP. I think supply chains hurdles are there. It's not going to go away in 2022. Somebody said on this panel today that it will be there for years. We have to find our ways to come out of it stronger and make good out of it.
Excellent, thank you. So I will pick up on the themes you've kind of raised there around technology, which I think in this case tie into that idea of agility. Just before we move on to that, Orhan, is there anything you would like to add in terms of your perspective on the disruption we've seen?
Thank you, John. Hi everyone. I think I'm bringing more banks' perspective. We are the largest bank in Russia and CIS region, and our commodity franchise is in Switzerland, and we have strong foot in GCC Gulf region, because we have quite massive flows in various commodities from agriculture to petrochemicals and energy, LNG, and others from and to the region. I think what is very important for us is monitoring of the cargoes and also control, as well as collateralization of our flows. Because from bankers' point of view, this has been quite a big challenge, because we would like to see better predictability and visibility to the market. I watched the previous panel as well, and it gave me a little bit more insight how the counterpart is thinking about the future of the industry. And I think these disruptions in 2020 and 21 gave us a lot of resilience and more flexibility going forward. And this made the industry quite progressive and innovative. And what I can say from our side is, like, we have seen a lot of issues like port congestions, limited capacity of works at the discharge and loading of the vessels, major issues on railways in our core region and elsewhere in the destinations, and unstable freight prices giving little or less predictability for the trades, because this is massively important for the commodity traders who would like to see better predictability for their net profits and their calculations, as well as the banks are involved in this process. Overall, restricted mobility basically means restricted banks and lenders' capacity to finance these cargoes. What we have seen also, a 10% increase in container freight rates is translated into reduction of industrial production globally 1%. So this has very strong link to overall production and the progress of economies across the globe, and especially for Middle East and GCC region. One more item I can mention about is, unfortunately, these disruptions are impacting small and mid-sized traders and the shippers much more than the large ones. There are some statistics about it, but this is due to mainly the statistics we have seen between 2020 and 21 across the world. 20 major ports, the average demurrage and detention charges doubled. The other way around about the pricing of the cargoes is, especially the cargoes shipped from the Black Sea, we have seen some spikes in 2021, sometimes going up to quadruple of the freight prices. On the railway side, we have seen major disruptions going to China and for the transshipment further. And all of this created certain restrictions and issues. But again, this made the industry much more resilient to go forward. And we've been increasing our trade volume during this process, and it's continuing.
Excellent, thank you. That's a really helpful overview, and it's great to have it's great to have a perspective on rail as well as just shipping. Maybe that's I think been a bit overlooked in this whole thing. So on the theme then of technology, the sense coming out of the discussion so far, I think, is that agility and resilience in your supply chains is crucial. Obviously, while all this has been happening, we've also seen a huge kind of a rapid move towards digitalization. So whether that's documents or kind of processes around global trade. Mark, maybe could you give us a flavor of what uptake of new technology has been like in this environment?
Yeah, certainly. Thank you, John. And I would say good morning, but I think it's now good afternoon. So good afternoon, everyone. I'd also just start by echoing what Nazan said, which is how good it is to be able to meet everyone again in person, face to face, back with the GTR family in it. Does seem like a very long time ago since I was last able to do this. But talking about digitalization, talking about the use of technology, allow me to adapt an old saying. I think COVID has been the mother of invention, or if not the mother of invention, at least the mother of adoption. If I look back to 2 years ago in my previous shop of Commerce Bank, we'd been discussing e-signatures for at least a year, if not longer. In the middle of March 2020, the use of e-signatures globally for Commerce Bank was approved in 30 minutes flat, because it had to be. We moved to scanning every single trade document. In 1 week flat, we went from being 100% paper-based to trade operations being totally paperless. And as a result, an unexpected benefit, 20% more efficient. Documents being turned around, our corporate customers receiving responses back 20% faster, tremendous improvement. I now moved to my current role within Abu Dhabi Islamic Bank. Fortunately, an organization that had spent and invested in digital channels immediately prior to COVID, and what we've seen is the adoption, the take-up rate has absolutely roared forward during 2020, 2021. So we're now seeing our digital channels at beyond 90% take-up rates for our payments. Now, those kinds of levels would have been unheard of before COVID. But it's not just been at those, shall we say, simpler levels. We've now seen optical character recognition coming in. So we're seeing trade documents being scanned for completeness automatically, without any manual intervention. We're seeing trade documents being scanned for keywords in anti-money laundering searches. Again, far more efficient, far faster. And then it goes into more complex value add, if you like. If I look at HSBC, another previous shop of mine, their work with Quantexa, where they now take trade finance documents. Every single trade finance transaction is screened automatically using transactional data that comes from those documents, adding to it data from external sources. So they can screen for over 50 different suspicious scenarios automatically. So the level of financial crime compliance and detail far greater than any manual screening could ever bring, but it's done automatically and quickly. If I look at another one, we're specifically talking about supply chain. In the previous panel, people were talking about commodity traders. If we look at Congo, this is where commodity traders have come together to form a platform almost of their own, together with banks, together with shipping companies, everyone involved end-to-end with supply chain on a single digital platform, looking at a single set of documents. Tremendously efficient. Overall, we bring all of these advances together and we see an increase in speed, an increase in efficiency, and an increase in improved compliance and audit trails. So lots and lots of benefits as we move forward.
Excellent, thank you. Nazan, I assume those trends are probably mirrored on your side as well. Could you maybe tell us a bit about how you managed the transition to digital in this kind of physical trade world? All of a sudden you're working remotely. How did that kind of unfold?
Certainly. I think our field is one of those exceptionals where you can say, yes, digitalization can be done, but it's never 100%. And the reason is when you're in supply chain, you have to supply something physically. That is something that cannot come through automation. So what we did in business and as a corporate level, we embraced the change and we were prepared for it before it hits Dubai. As I said, I think we are privileged and we are very lucky when we are in UAE because we were all on our toes and we were ready for the change before the lockdown comes. Every company was prepared. Every employee was given high-tech technology actually to be prepared to work from home, be it printers, phones, laptops, everything, so that when they are sitting at home, they can work. And this started from governmental levels. All these were transferred down and extended to the smaller businesses where they could actually work from home with very, very, very little disruptions. So basically what the region did, we literally embraced the change. We went for all its challenges. People were prepared who were at home. And almost 70% of it was done. But here the question is those containers that have to be stuffed, trailers should be moved. You need to have the products somewhere stuffed, stacked, and all these stuff. Those parts required a lot of attention. At least 30% of the business had to go on physically. So we had to make sure that pandemic protocols, as well as all these sterilizations and disinfection measures, everything is taken care, and they are in good conditions. All the companies were provided with best facilities. That you could see that every night the whole city was being disinfected. So we all learned from what the government was doing. We were also doing the same thing. The companies were doing the sterilizations to make sure that those who have to come to office or those people who are running around are in safe conditions and they are not literally under any threat. Normally, when it comes to bill of lading, LC, delivery order, we're still far from digitalization, especially in this side of the world, and we are working on it. The infrastructure is still not there. So one of the barriers that we had is still we have to collect bill of ladings from the shipping companies. There are delivery orders that can be transited, but what we need to do is to have these transmissions more electronically, to actually facilitate the way the supply chain can go further. Let's not forget the mode of transports have not changed. We are still there with containers, ISO tanks, flexi tanks, oil tankers, what else? Ships are there, air cargo is there, the planes can do it, and of course rail. We still don't have new modes of transport to get into new infrastructures to make sure that we are ready for automation. That was part of our hurdles. It is still there. We are basically challenging it and preparing for it. Every year it will come with more challenges. I think it's really something that can say here, what happened during the last year in Dubai and in UAE, Middle East, was that they say when the going gets tough, the tough gets going. Really, it was very tough here with all the difficulties. We could manage it, and all these number of TUs that Mike was talking about were handled. But I still think there will be 20 to 25% barriers that we will probably, with the help of the investments and also the people that are going to be on the side of the service providers, probably we can manage that as well.
Excellent, thank you. So Mike, DP World has obviously launched relatively recently this cargoes finance platform, and when we talk about financing, this has this kind of overarching role. It touches on every point that we've talked about sort of so far. I wondered maybe could you give us a bit of an overview of what part financing has played in the conversation we're having around supply chains?
I think, thank you for that. I mean, earlier question that you asked about technology. I mean, when we wanted to go ahead and do finance was an important aspect of it. If you look at supply chain, you have the physical supply chain where I talked about sea rates, where we created a lot of multimodal transportation, sea, air. And then we had cargoes flow, which shows you the visibility and digital supply chain, where your container is. Worked on a lot of products right now, which can go with your container and identify for 3 years the location of a container. So the quick aspects. Then the third aspect is the financial supply chain. This is what we want to talk about in terms of different. So if what we realized was, I mean, in tier 4, tier 3 suppliers in like emerging markets right now, where we found significant lack of capital, and then there was a working capital challenge we had to solve, factoring, reverse factoring. and also solve a lot of inventory financing in terms of our free zone customers right now where there's an opportunity for them to go look at, especially with pandemic, as revenues were coming in, receivables were getting delayed, and we saw this opportunity. And then the challenge right now for customers right now where we really wanted to go solve their problems. So at the core of customer centricity, what we want to really solve is how can we provide the much needed liquidity for smaller players? You could be like a t-shirt manufacturer out of like Bangladesh, or trying to go back and support a major manufacturer, or you could be an avocado farmer in like Rwanda. I mean, we really saw that, okay, lack of capital, 9 months, 4 months, 5 months of actually getting paid by the time they actually produce the merchandise. This area right now, we said, okay, how could we go solve them and bring more and more of these folks right now to go back and then go through our ports. So when they go through our ports, obviously we have like a good control, and container as a collateral becomes a very, very important aspect of de-risking a lot of the financial institutions over here right now, which we're providing a much needed service. And of course, the platform provides a lot of leads, specifically for financial institutions. When they say, okay, if they come through the Cargo's platform, it's actually somebody who's actually has some information from DP World, and how do we go ahead and then provide financing? And we're shortening the time for Know Your Customer. That's another important aspect, as many of you folks know that. In providing data, what history do we have about the customer based on the customer consent? Do they shipped like 50 times to large Tesco's and Marks and Spencer's of the world? And then are they like a tier 2 supplier for Unilever, for instance, in different parts of the world, a line hauler? Today he gets about 2% bill discounting on an invoice at about 24 to 28%. How do we bring the cost of borrowing down for them by providing a lot of non-banking financial institutions to come to the platform and say, hey, here's an opportunity for you to de-risk, here's the data that we have, and then you make your own risk decisions right now in figuring out. But we are facilitating that, again, in the underpinnings of a blockchain platform, whether it is like e-bill of lading or consolidated commercial invoice or a packing list, which gives you what's there in the container. And that's the whole construct as to how we are developing the solution right now. So leveraging our own assets in making sure that, that is actually bringing the cost of, the collateral was a big discussion earlier, so I'm not going to touch on that. I think everybody knows it over here. But that's the main thing that we're solving right now in providing data, and then using our physical assets as a container in terms of the stream of commerce in helping making good decisions for financial institutions over here.
Excellent, thanks. And it's great to have the examples of specific goods or specific commodities. And on that note, maybe Orhan, I noticed you were nodding during that. Maybe you could give us your perspective. Have you got any kind of examples that spring to mind of specific, specific goods, specific commodities, where from a bank perspective, there have been questions to answer over the last few months?
Sure. I mean, first of all, it's been a very challenging year in 2021, and I totally agree on Mark and Mike's points about how to monitor and how to control these commodity or trade flows. That's a pretty large challenge for the banks. What we have seen is the main difficulty on the paradigm change to manage like thousands of like shipments or railway wagons or millions of tons of goods. To manage all of these from an office, from financiers, from banks' point of view, has been much bigger challenge, because pre-corona, what we have seen is we could be able to travel more, we could be able to see the shipments, cargoes much closer. But during this process, all of this managed from an office, far away from the real shipment locations, has been a challenge. Therefore, especially on the dry bulk cargoes, have seen lots of issues on the availability and predictability of the all the shipment means. This is mainly in the Black Sea, because we are used to having like 4 months of frozen river and then like transshipment to especially Northern Africa and to Middle East. We are used to that, but we were not used to seeing these unpredictability and very long shipment times, much longer than usual shipment times during this process. The other part is the energy, especially on LNG cargoes and crude oil cargoes. I mean, efficient, cost efficient, and a large enough shipments in order to bring together our funding, financing, has been another challenge. And especially on coal cargoes, we have seen a lot of accidents on the railways and a couple of months of disruptions towards the eastbound cargoes to China. Those were, I mean, where I can pinpoint what happened in 2021. But going forward, what we see is like world trade right now, $22 trillion, and according to World Trade Organization, it's going to go up to 30 trillion within a decade. So if you look at from this perspective, I think we need to get used to these challenges and provide solutions. But what kind of solutions available and what we can do more? Yes, Congo is very important. We are also using Congo, and it connects many counterparties, and there are many other solutions in the market. But is it enough? That's a big question, because electronic bill of lading, electronic FCRs and warehouse receipt, as well as holding certificates, electronic delivery notes, as well as collateral value of these documents have been quite important. I also I would agree that the KYC side of the tech solutions, RegTech, TradeTech on KYC side is pretty good. We can identify and get sophisticated on that. But the faster verification of the shipments and the flow of goods in the chain is far from maturity right now. I think there is a lot to do there, because this is going to give more boost to cross-border trade, and especially there is right now a little bit discrepancy between European technology, like Africa, especially Northern Africa and Middle East. And we see a lot of progress in GCC region, solutions, fintechs, and companies who are bringing very good solutions to these challenges.
Excellent, thanks very much. I think we've had some questions in from the audience, so I'll go to those now.
Okay, wonderful. Really great panel, but I have a few questions, and here they are. And don't shoot the messenger. They're not my questions. They're coming in. Okay. And the first one is following on from Nazan said, how ambitious is transformation of the trade ecosystem, shipping and trade finance, when even with digitalization, the challenges remain we experience, such as the Ever Given in the Suez Canal and the container shortage? I think you were kind of making that point, Nazan. Maybe, you know, no matter what we do, we can still have the physical problem. But please, how ambitious is it?
I think I touched that point already, and we were discussing. It's not something that you can say that 100% can be done in a blink of eyes. Just in the earlier panel, it was discussed that these things need time. We have to gradually actually go inside it. We cannot just dive deep and say, okay, from tomorrow, shipping will follow the trade finance and we will become as automated as trade. No, that cannot happen. It is something that would go step by step. And as you predominantly see, we will follow what the other automated patterns will bring in, but that definitely needs time. It is not something that you can overnight say it will get automated, because ships are not that automated. You can see manpower on the ship, you can see manpower at the port, you can see drivers with the trailers, but yes, that can happen. I cannot say how, but I'm sure in 2023, which is the next year, we will be sitting here saying last year we didn't have this, today we are doing it automatically.
Great. I have a follow-on question, and maybe it's, I don't know who it's for, but what was the experience of the marine insurance industry last year? I guess it's about losses, a little bit of visibility. How did the marine insurance do?
No.
I think, I mean, in terms of the loss we're able to recover, obviously, the processes, that's the best I could give. But I mean, without going back to the previous question, I want to take this opportunity to talk a little bit more about it. See, when there is an adversity in the overall global trade, through the World Logistics Passport, which is His Highness's program that was announced in Davos about a couple of years ago, we've created several alternative routes through multimodal transportation. So we used sea-air trade, like somebody from Far East right now Normally, they would take air route through like Europe and then subsequently take it to Africa and Latin America. Now we have a great opportunity to present that and stop in Dubai and then save about 8 hours and then quite a bit of cost and time. So while the challenges came in, it also gave us like an opportunity to look for new routes, a new alternative. So sea air trade was an important aspect. So a lot of like suppliers, for perishable merchandise, when they can't afford like or limited supply of air cargo was available, they were able to ship and then bring it to Dubai, and then we would fly them from Dubai to different parts of the world. That became another area. And going back to your question on marine insurance right now, I think wherever we had a challenge right now, the insurance industry stepped in. That's the best we could actually answer that question.
Well, really good answer.
Question.
Really good, because instead of focusing on the problem, you gave us a solution, which is always good. And the final question is here. Someone asked, do customers really want banks checking documents? Surely it's liquidity and risk coverage they want.
I think if I jump in there, I think we'll find from a regulatory perspective, there is no option. A regulator would close a bank down if it wasn't checking those documents to make sure that there was no financial crime implication there. So take my word for it, to all of those corporates out there, if there was an opportunity for us to appropriately reduce the amount of checking that has to be done, I'm sure every bank would seize that opportunity, but I don't think from a regulatory perspective there's any option whatsoever.
I definitely take your word, Mike. Definitely. That's the last question, John. Over to you.
Excellent. Cheers. Yeah, we're really short of time, but there was just one last thing which I did really want to get to, which is around the point of digitalization. And obviously, this has been a really kind of positive discussion on this, but obviously different parts of the world are moving at different speeds and different companies are doing different things. Maybe Mark, I could finish with you here because I think we need to move on. But what are the difficulties that come from that kind of fragmentation, and how can the industry as a whole overcome that issue?
I think it's a very good question. I'm delighted that there are so many organizations, fintechs, platforms, etc., developing, all of which bring their own benefits. But I think we've all been inundated with ad hoc firsts. I don't know how many first blockchain transactions I've seen announced in the media, but it's certainly well into the dozens. And I do feel at times that we have platforms and systems that are competing with each other, each looking for its own niche market. I think it's important that an element of standardization, an element of industry consistency comes through, so that whilst all of those innovative platforms and systems are all still supported, that they can all actually integrate and speak with each other. And I think that would bring the maximum benefit to all of the parties within a supply chain.
Excellent. Thank you. That's perfect. Okay, so I'm afraid that is all we have time for. Thanks, everyone, for listening.